Welcome back to my channel. I'm Dan the Financial Guy, here to help you reach your personal finance goals. In today's video, we're going to talk about why you might want to consider investing in physical real estate property and how you can begin being a real estate investor. One option for physical real estate, and the first logical option, is the single-family home. Many new real estate investors take this approach, purchasing and renting out a single-family home. Single-family homes include houses, condos, or townhouses, and many people purchase single-family homes as an investment property to immediately rent out instead of just being a primary residence. Other options include living in the home while renting out extra bedrooms or renting out the property as a vacation rental, such as an Airbnb. We'll be looking at purchasing a single-family home as an investment property and immediately renting it out. So let's look at a couple of potential examples. Here is a single-family home located in Oak Lawn, Illinois, a suburb of Chicago. It's listed for $249,000 and has 3 bedrooms, 2 baths, and is 1,153 square feet. It's listed on both Redfin and Zillow. So let's take a look at a high level of what it might look like to purchase this home as an investment property for cash flow as a passive income stream. Assuming a 20% down payment of $50,000 and assuming 4% interest rate on a 30-year mortgage, 5% property tax, some PMI, an estimated mortgage payment is $1,500 per month for this home. However, according to Zillow, an appropriate rent for this home in the area would be about $1,800. Assuming putting some money aside each month for maintenance, this property could provide $300 of passive income a month. So taking a look at another property now, here is a condo for sale in the same neighborhood. It's listed on Redfin and Zillow as well. It's a 2-bedroom, 1-bathroom condo, and it's listed for $130,000. Using the same assumptions for mortgage and taxes as earlier, this property would have an estimated monthly mortgage payment of $780 a month. However, according to Zillow, this property might only rent for $1,100 a month, but this would give us a potential passive income stream of $320 a month, which is interesting considering this property offers the same or slightly more cash flow a month for a lower initial investment than the previous home we looked at. So after looking at a couple of potential case studies, what are some of the pros and cons of investing in a single-family home for cash flow and passive income? First, on the pros, single-family homes allow you flexibility to live in and rent at the same time. You can also easily live in your home as your primary residence, pay it off, and then move to a new home while keeping this original home to rent out. It's a great way to start building passive income with a low barrier to entry, as there is a high volume of single-family homes on the market. In that same regard, if you choose to sell the property at any time, there is a large pool of people looking to buy single-family homes at this time. One of the biggest cons, however, is vacancy rate. Since you only have one unit, your one single-family home, if the tenant moves out, you're left with no cash flow until you're able to find a new tenant. Maintenance costs and time can also be a downside, depending, of course, on the age of the home and other factors, or if you've arranged with the tenant for maintenance items such as mowing the yard or shoveling the snow. However, that's part of the risk involved in real estate investment. So a second option for real estate investment, other than the single-family home, is multifamily housing. Multifamily properties include duplexes, which have 2 units, or properties with more than 2 units, such as 2 different duplexes or a 4-unit building, or large multi-unit apartment buildings. Multifamily properties offer the possibility of living in one unit and renting out the rest, for instance, living in one half of the duplex while renting out the other half. By doing this, you're well on your way to, as famous real estate investor Grant Cardone says, renting where you live and owning what you can rent. So let's take a look at some multifamily case studies now. This first property is in Glendale, Arizona, near Phoenix. And based on the description, it's unclear if this is really a duplex or a fourplex. So for the sake of this exercise, we're just going to assume that it's a 2-unit duplex. Looking at the cash flow and using our same assumptions for down payment earlier, we see an estimated mortgage payment of $1,950 per month to purchase this property. The Zillow estimate for rent is $1,100 for a month. So for 2 units, we're looking then at $2,200 a month of cash flow, which gives us $250 a month in passive income. Now for the more wealthy investor maybe, here's a 28-unit apartment building in Omaha, Nebraska, which is listed for $5.1 million. Obviously this is not for the real estate beginning investor, but you'll quickly see why real estate investing can be so lucrative with this example. For a 20% down payment on this property, you'd have to come up with $1 million. And then on top of that, you'd need to stomach a monthly mortgage payment of $30,750. However, with 28 units at an estimated average rent of $1,300 per month, you can see the staggering projection of $5,650 a month in passive income. So, knowing that, what are some of the pros and cons then of multifamily real estate investing for cash flow? First, there's a higher potential return on investment. With more units, you're able to get more cash flow, as we saw with the previous 28-unit apartment building example. Additionally, there's less risk related to vacancy compared to renting out a single-family home. If you were to lose one tenant from that 28-unit apartment building, you'd still be getting 96% of the maximum cash flow from the remaining 27 units. There's some cons as well, though. As we saw, the high initial investment is a big barrier to entry. Even for duplexes or smaller amounts of units buildings, the cost of these properties is usually significantly higher than that of a single-family home. Property availability is another issue compared to single-family homes. There's a low amount of publicly listed properties, and for those properties that are listed either publicly or privately, there's a highly competitive group of people looking to gobble up these properties. Of course, with more units and property comes more maintenance and time investment as well. However, for a larger property, you can use a service company to manage the maintenance, but you will need to consider that that's going to eat into your monthly cash flow as well. I hope these case studies were useful and that this was a good introduction to real estate investing and showed you how real estate investing can be a powerful passive income stream. Don't forget to take advantage of my free budget template and use it to plan your budget and to dream about the financial freedom you could experience with $5,000 a month passive income when you're a real estate mogul making $1 million deals. The budget template is linked in the description below. If you like this video and learned something from it, be sure to hit the like button and subscribe so you don't miss any more of my videos. Thank you for watching. This is Dan the Financial Guy, and I will catch you next time.